Capital Report welcomes Tom Geisel, President and Chief Executive Officer of Sun National Bank. Good to see you, Tom.
Thank you.
Tom, welcome back.
Thank you.
Right before we got on the air, Raphael was saying there's the good news and there's not so good news here. So the good news is loan applications from small businesses are up 38%. Good news.
Very good news.
The not so good news is
people aren't looking to borrow as much money as they did prior to the recession. So what it tells you is that they're putting applications in and they want to borrow money because they need to borrow money. And so that's a good thing. What's not so good is they're not being opportunistic. You know, in this time when our economy is where it is right now, rates are relatively low. They're very low, as a matter of fact. So if you need to expand, you need to be opportunistic, now's the time to borrow. Because as we've seen with mortgage rates, they're starting to go up.
Right. So entrepreneurs don't have the confidence yet to say, oh, you know, I got this idea, I'm going to take the risk, I'm going to try to borrow some money and start this idea.
They do not. They do not. I think they're optimistic, but they're not confident yet that the market, we're going to have sustainability in the market.
So what are the obstacles that you think that they're seeing? What are the things that are preventing you to give out more loans like you want to?
You know, I think it's not so much the banks are having the obstacles. I think it's really the borrowers. It's a mental obstacle. It's a mental obstacle of what's going to happen. There's still unknowns in the future.
With what though, Tom?
Taxes.
Taxes.
That's a big federal, state, what?
The biggest issue we talk to our borrowers about right now is the unknown. You know, when you're in trouble, who do you usually reach out to? Your family. Right. In this case, Uncle Sam, our uncle, is not helping us. It's not helping the economy. Housing starts are up, that's a good thing, right? New car sales are up, that's a good thing. Earnings are relatively flat, but they're only flat now because I think everybody's taking as much expenses as they can out of the marketplace right now. But between taxes, between the Affordable Health Care Act, between sequestration, between the fiscal cliff, between Dodd-Frank, there's so much uncertainty out there on the government side that it's inhibiting people's want to borrow.
So the Obamacare, Affordable Care Act, that's something that small business people really are worried about. How's it going to hit me, my pocketbook?
Absolutely. Absolutely. Are they going to be able to keep their workers? Are they going to have plans in place to be competitive? Do they pay the penalty? What are they going to do?
What
minimum
about
wage.
You mentioned
same thing.
Minimum wage, the possibility. You mentioned Dodd-Frank, that's regulations, but regulations of the banks, how does that affect the borrower?
It affects the borrowers to the point where the borrowers end up through Dodd-Frank having to pay more for the same services because those services have to be offset somewhere in the system.
Let's put things in perspective. Reference is made to Dodd-Frank, named after two members of Congress, former members, Senator Dodd and Barney Frank in the lower house. The whole idea of that legislation, without going into all the history, was a reaction, or some say an if you will, reaction to some of the problems that we had fiscally in 2008, 2009. Now, what would you say right now to the average person, not a banking insider, Tom, who says, I don't understand. I thought the government got involved so that some of the banks who got involved in certain activities that they shouldn't have been involved in, that screwed up the entire economic infrastructure of the country, that's what that was about. And isn't that a good thing, you say?
I would say it is a good thing in moderation, just like everything else in life. So you've got to make sure that you look at it and you make sure that what you're putting forward is solving the problem. And
so the whole subprime thing, didn't we fix that? Wasn't it supposed to fix the subprime thing?
Well, you would think so, but now you've got interest-only mortgages that are out there now, so that's all starting to come back. Reverse mortgages, there are a lot of different of those, what I'll call exotic products that are starting to come back into the market.
Well, how do you avoid that?
So the regulations didn't stop that. The regulations are impeding progress, but they didn't stop what they were supposed to stop.
They stopped it for a short period of time.
Okay.
But we have short memories because people want to make money, there's earnings, certain people want to buy certain houses because they feel like they have a certain lifestyle, and the only way they can afford it is this way.
But Tom, there we go again. In many ways, isn't it fair to say, without getting into an overly philosophical conversation, that forget about what the banks did or didn't do, some banks, that it was certain people in this country wanting things they couldn't afford and acting in ways that was in fact irresponsible and putting themselves, they were over leveraged, over mortgaged, if you will. How do you regulate that?
You can't. That's human behavior.
How does a bank help someone understand what's real for them, what's realistic and what's not?
By sitting down and actually being a partner. Sitting down
Describe
and saying,
what that looks like.
Well, really sitting down and saying, okay, tell me the goals that you're trying to accomplish. How can we help you meet your goals? And walking them through the progression of, if things are perfect, here's what's going to happen. If you have a hiccup in your personal life or your professional life, here's what might happen. Are you willing to go through that? Are you so sure that you're never going to have a hiccup? And then sometimes the banks have to step back and say, we can't help you in that way. You need to go somewhere else.
Now, Tom, at one point, and we talked, over the years since 2008, I mean, there was the idea that the banks didn't want to lend, that they were afraid to lend, and so that they were the obstacles. Was that ever true, and is it true now?
You know what? I think it was probably true at the beginning of the crisis. I think it was true because, the banks, just like everybody else, were in hunker down mode. They were trying to make sure that they understood what was happening in this economy. And sometimes when you do that, you're like a deer in the headlights, you freeze, right? But once everybody really understood what the playing field looked like, banks make money by lending money. They don't make money by holding on to their dollars.
But Tom, there are banks and there are banks. What I mean by that, there are different size banks, different types of banks with different areas of expertise. Describe yours and how it's different from a smaller community bank.
Well, we're a $3.2 billion bank. We're the second largest commercial bank in New Jersey. So we focus on the middle market, the lower middle market, small business, and the consumers. The community banks are typically a bank that might have 2 or 3 or 4 or 5 branches in a small geography. We're across the state.
What's your footprint? Describe it.
Well, the footprint is from, we have offices from Cape May all the way up through Essex County. We do business in 21 of the 21 counties of the state.
So how does that change your philosophy in terms of how you're marketing and how you're getting out there, as opposed to a community bank?
Well, we look at a little bit of a bigger picture. We look at what's happening across the state. We look at what's happening in New York. We look at what's happening in Pennsylvania. And we look at what's happening on a global perspective.
Is that your competition?
Our competition tends to be the bigger banks for our commercial business, for our business customers.
It's interesting as we think about this. In this economy, with people's attitudes being what it is, you describe how gun shy they are. Post Sandy, how has it impacted it?
It's interesting. I think people took a step back and they realized just how fortunate they really were. And so when you do that, there's some introspection and you sit back and you think about where you are and where you're going. But then it's human nature all over again. People forget about it. It's 6 months later, it's 8 months later, and they go back to old habits.
And old habits, good habits, bad habits?
Well, when you talk about doing things you shouldn't from a fiscal
yeah.
responsibility perspective, that's what I mean. Those are bad habits that
I see. But I thought you were also talking about, they said, well, maybe I will be more modest in what I want. Maybe I'll be less audacious in my borrowing practices.
I think what drives that is the economy. Again, I think that if things start to get a little bit better in the economy, I think you'll see people borrowing.
What are 2
more.
or 3 things that you can recommend local government, state government or the federal government to do or not to do so that things could really juice up?
A few seconds, go ahead.
I would say taxes, certainly one thing, reduce taxes. I would make sure that there are incentives for people to grow within the state. Those are the 2 biggest things, and also incentives for employment.
One thing I want to say before you get here, a minute left. There was an event that Raf knows about as well. It doesn't have to do with banking, but your bank was involved in this along with some others, our partners at the New Jersey Performing Arts Center. Your bank was very much involved in bringing the living governors together, the elected governors. Governors, can you do this?
No, I can't remember who they were.
McGreevey.
Well, the only one that
Whitman.
wasn't there was Governor Corson. That's what I remember.
That's the easy way to do it. That's the right way to do it.
Apparently he was busy. So all the other governors together for you, just real quick before I let you out of here, what was it like for your bank to be involved in that initiative at NJPAC?
It was absolutely terrific. It was non-political. It was straightforward. It was hearing from the heart of the leaders of our state for the last 20 years?
Yeah.
It was great.
Actually, it was more than 20 years when you really think about it. It's going back further than that. And you know what else was great? They seemed to be collegial, supportive of each other, and agreeing on a lot of things. But you notice none of them are running for office anymore.
And I think that's why.
Thank you, Tom. Appreciate it. Tom Geisel, President and CEO of Sun National Bank. Thanks for joining us. That's it for this edition of Capital Report. I'm Steve Adubato, Rafael Puerman. We never argue. We'll see you next week.
New Jersey Capital Report is a production of the Caucus Educational Corporation, celebrating 25 years of broadcast excellence, N13 for WNET, NJTV, and WHYY. Funding for New Jersey Capital Report has been provided by Barnabas Health. Johnson & Johnson, New Jersey Manufacturers Insurance Group, Community Education Centers, Qualcare Inc., Bloomfield College, and by United Water. New Jersey Capital Report has been produced in partnership with St. Joseph's Healthcare System. This program has been made possible by the Fidelco Group.